Welcome. In this video, will Zbcn coin price go up? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. One of the most notable technical formations in the chart is the currently observed descending trend structure. This descending trend has been acting as a resistance line that has limited price movements downward for some time and has exerted pressure on market participants. However, when we look at the current price behavior and the overall technical data, we can observe a strong movement toward this trend line. This indicates that the price is approaching a potential breakout level and may be on the verge of a technical shift. Descending trends typically form when prices consistently make lower highs and lower lows. This suggests that selling pressure dominates the market and that investor sentiment is cautious or pessimistic. However, when such a trend is broken with sufficient momentum, it is often seen as the beginning of a significant market reversal. A breakout from a descending trend suggests that sellers are losing strength and buyers are stepping in to gain control of the market. A similar situation appears to be forming in the current setup. The price may have tested this descending trend line multiple times over a specific time period, receiving downward reactions each time. However, the fact that the price has recently approached this trend line more strongly, has not consolidated beneath it, and is forming higher lows can be interpreted as a sign of a possible breakout. This shows that market dynamics are changing and that we may be nearing the end of this descending trend. A breakout above a descending trend is considered not only a technical formation break in analysis, but also the overcoming of a psychological barrier. Because when investors see such long-term descending trends being broken, they tend to believe that the previous declines are behind them and become more inclined to take bold actions. This often leads to sharp and strong upward movements in prices. In this context, if the current descending trend breaks upward, it is highly likely that the price will gain significant momentum and accelerate with upward moves from a technical perspective. Moreover, such breakouts are not limited to short-term price actions. They can also mark the beginning of medium and long-term trends. A descending trend breakout often serves as the foundation of a new upward trend, especially if this breakout is supported by volume, meaning if there is an increase in trading volume during the breakout. It confirms that buyers are becoming more dominant in the market. This indicates that the upward price movement is not just a temporary reaction, but rather the beginning of a more sustainable and lasting trend. Upon closer inspection of the chart, if this descending trend line is broken, the price is expected to initially move toward previously established horizontal resistance zones, and after surpassing those levels, it may reach higher targets. In technical analysis, it is common for the price to test prior resistances after a breakout and then surpass those levels to reach new highs. This process acts like a chain reaction, gradually pushing the price upward. Additionally, after a descending trend is broken, there is often a retest phase. This means that the price returns to the broken trend line to test it as a new support level. This process signals a healthy upward movement. If the price touches the trend line again after the breakout and then bounces upward, it confirms the validity of the breakout, making a continued upward move much more likely. For investors, these kinds of formations are highly valuable. A descending trend breakout opens the door to buying opportunities. It also presents a favorable risk-to-reward structure. However, we cannot base our analysis solely on trends, so let's take a look at other metrics as well. Stay tuned. One of the most striking structures on the chart is the clearly noticeable impact of Fibonacci retracement levels on the price. Especially in a Fibonacci retracement analysis drawn from top to bottom, it can be seen that the price is moving toward the critical levels of 0,618 and 0,786. These two ratios are frequently used in technical analysis to predict market behavior and are considered zones where investor psychology plays a significant role and where price movements are often influenced. The current movement of the price toward these levels can be interpreted as a highly positive signal from a technical standpoint. These regions are often referred to as reaction zones, and when the price reaches these levels, it either consolidates to gather strength or initiates a strong upward trend with a high volume breakout. Therefore, the fact that the price is now heading toward these zones indicates a significant technical development. The Fibonacci 0,618 level, also known as the golden ratio, is an extremely important level in technical analysis. A large portion of market participants closely monitor this level because it has historically been a point where strong reactions and trend reversals have occurred. In the current scenario, the price climbing toward this region suggests that buyers are still active in the market and that sellers will be tested at this level. Meanwhile, the 0.786 level is one of the deeper retracement levels in the Fibonacci sequence and often acts as a final line of defense. If the price reaches this level and fails to hold, reversals usually follow. However, if this level is broken upward with strong volume, it indicates a fundamental shift in market structure and suggests that downward pressure has come to an end. From this perspective, the price advancing toward these two key levels presents a major technical opportunity. Investor interest in these levels is not limited to technical analysis. Historical price movements show that both psychological and algorithmic trading activities are also active in these zones. This means that when the price reaches these areas, an increase in volatility and a significant rise in trading volume can be expected. Such increases are typically precursors to large price movements. It is quite normal for the price to initially stall when reaching the 0.618 or 0.786 levels. Technically, this is the market's breather phase. However, if strong upward momentum develops at these levels, especially if supported by buying pressure with volume, it is highly likely that the price will surpass these levels and head toward higher resistance zones. In such a case, the price may enter not just a short-term rally, but a more medium to long-term uptrend. The price approaching the 0.618 or 0.786 levels should be considered not just as a resistance test, but also as a potential bounce point. An upward reaction from these levels indicates that investors are motivated to buy and that confidence in the market is beginning to recover. Such strong reactions often lead to the price rapidly advancing to higher levels. Moreover, the rallies that follow these levels frequently turn into sharper price movements as momentum increases. It's also possible for price movement to slow down as it approaches these zones, and this is normal. This is typically referred to as an indecision zone. However, price behavior in this area should be closely monitored. A bullish formation, such as a flag, triangle, or pennant, forming in this region could result in a much stronger upward breakout. Therefore, these levels may also mark the beginning of key technical patterns. There is a noticeable structural formation on the RSI indicator. In particular, a distinct downtrend line that forms over time and affects the overall structure of price movements shows that RSI values are suppressed and limited along this line. However, this is not always a negative scenario in terms of technical analysis. On the contrary, such falling trend structures signal that a new wave of strengthening may begin in the market as soon as they break. In this context, a falling trend structure in the RSI, if it ends with an upside breakout, could be an important sign that price action is accelerating to the upside. Such falling RSI patterns usually signal periods when the market is gathering strength, short-term weakness is ending, and buyers are preparing to take the initiative again. The fact that the RSI has touched the falling trend line many times increases the importance of this level. Because in technical analysis, the more contacts, the more meaningful and strong the line is considered. In this context, the fact that the RSI is currently hovering close to this falling line is a promising signal that a possible breakout soon could trigger a strong and effective rise. RSI trends should be examined in between. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.